Good afternoon to all of our CLA family members, to our clients, our community partners, and to all of our friends of CLA. We truly wish that we were conducting this live stream under different circumstances, but we are grateful to be spending the next 30 minutes with you, and we truly look forward to helping you navigate over the next several weeks. On behalf of all of our CLA family members, we wanted to start this session by wishing all of you and your loved ones health. We know it's been a tough couple weeks. It's a journey that every single one of us is taking. It looks different for each one of us, and we really don't know what the end is going to look like. I think what's compounding some of this anxiety too is the fact that everything's changing not by hours, but by seconds, and that's creating a lot of confusion and fluidity to the situation we're under. Now, despite the fact that it has been a really chaotic few weeks, I do want to take just a moment here to really recognize and celebrate the entrepreneurial spirit and the generosity that many of our clients and many of our community members have had. We have seen some really amazing things. We have seen generosity of companies donating supplies like N95 masks. We've seen a lot of companies that have been retooling to manufacture much needed supplies, people that have changed from being a distillery to making hand sanitizer, people that have helped to develop and manufacture ventilators on the fly. And we've also just seen people lean in and support one another and to do their part to stay home and slow the spread. So I always think and reflect that sometimes it's during these really difficult times that we truly see the best in people, and I definitely think that's been the case here. Let's talk a little bit about what this webinar series is going to look like. So our goal with this series is to really be a voice of reason for all of you as we work through the changes that we're seeing in the market. The series is going to focus on what the current developments are and also provide you strategies and provide updates to frequently asked questions that we're getting from the clients that we serve. So we'll talk about these developments in terms of what are the legislative updates that we're seeing, what are the cash flow and liquidity management strategies that we're coming up with to help support you during these times, and then how do you handle your workforce as well as we're navigating these issues. While we have a little bit of a planned agenda for the next couple weeks, I'm sure you guys all understand that the situation is fluid, and so therefore, if we need to move topics to be responsive to what we're seeing, we absolutely will do that. And we also will be pulling in subject matter experts with each of these discussions that have been engaged in that topic so that they can truly add value to you. Our discussion today is going to focus on the Family First Coronavirus Response Act. That was a substantial bill that was passed last week, and it's created a lot of questions and uncertainty for our business owners. Before we do that, though, I want to just step back and give a little bit of an overview of what we've seen the last couple weeks with legislation and what we still see coming down the pipeline, as well as some administrative changes we've seen that impact your business. So let's back up just to the beginning of March, where Phase 1 legislation was passed. That legislation was $8 billion and was really focused on the healthcare industry to allow for funding related to providing for additional testing and research. Phase 2 is what we got last week. That really dealt with various aspects of paid family leave and the related tax credits and expanded unemployment insurance and the impact that it has on companies. So that's what we're going to be focusing on throughout the discussion today. There's a third piece of legislation that you've probably been hearing about in the news that hasn't been passed yet. It's expected to be passed any day now. That is the third phase of the stimulus bill, and that is really intended to help protect both the American workers and the companies that are supporting those workers. So we're going to go into depth on that bill once it passes, and after we have a couple days to digest that legislation so that we can truly provide some strategies and insight that will help support the businesses. The other big development that I want to touch on relates to changes that happened with the tax filing deadline last week. And boy, was that a roller coaster. As a tax professional, I never thought that we would be getting our legislative updates via Twitter. But really what happened was it started as just a deferral of the payment deadline, and there were also limitations on how much of the liability could be deferred. Well, as things have progressed in the country and it's gotten more difficult for people to practically even be able to file their taxes on time, that guidance has changed as well. And last Friday, the IRS introduced guidance that basically aligned the extension deadline with the payment deadline. So now the filing date for most taxes, individuals, corporations, is going to be moved from April 15th to July 15th. But I want to clarify that there's some pretty big caveats related to that. So if you are a fiscal year corporation, that guidance may not apply to you. Similarly, that guidance won't apply to gift tax returns and certain types of excise tax returns. So the point here is, if you have any doubts or questions, we really are encouraging you to reach out to your CLA professional and get clarity around what those deadlines really are. I also want to emphasize that with that change in the filing deadline, moving from April 15th to July 15th, there's a couple important things that you ought to consider. So first of all, if you are due a refund, the government is still encouraging you to file your return as soon as possible so that you can get that refund. They're still right now saying on the IRS website that they're issuing refunds within a 21-day window. Again, could change anytime. Things are fluid, but right now that's the most current guidance we have. Secondly, if you aren't going to get a refund, but you're going to owe a payment, we still think it is critically important that you go through the process right now of working through your return and understanding what your payment obligations are going to be, not only for your final 2019 liability, but also for your successive first quarter estimate for 2020 that will also now be due July 15th. We all get in front of your cash planning and liquidity needs in times like this so that you can be very prepared and thoughtful with how you run your business. And finally, a word of caution too is that because this is moving so rapidly, there are also a lot of changes to what states are doing with respect to this extended deadline. So you really need to understand whether or not the state that you reside in, or maybe many states that you file in, have adopted these deadlines and what that means for you. And certainly, again, whenever in doubt, contact your tax advisor. So now that we've covered some of the recent updates, I want to introduce Jen Rowan. Jen is a principal out of our St. Louis office. She is part of our federal tax solutions team, and she also works on the work opportunity tax credit. So Jen has spent a lot of time digesting the Family First Coronavirus Response Act. It's a really complicated bill because it's got two components to it. It's got a lot of HR components related to paid leave, and then it also has a tax credit component associated with it as well. And so we're going to focus on really both aspects of that bill and what it means to you as an employer. And what I want to emphasize as we go down the road of this discussion is, again, the bill was passed last week. There are supposed to be regulations issued, hopefully yet this week still, that help address a lot of things that were not addressed in the bill. But just know that there are going to be areas that we get into that are a bit uncertain. And as we get into those, we'll highlight those and certainly follow up with guidance as we have them. So again, Jen, thank you so much for joining us. We're thrilled to have you today.
Thank you so much, Leslie. It's an honor to be a part of this. And as you said, it's so hard to be coming to our CLA family and our family of clients under these circumstances. But just to echo, I appreciate your engagement, and all of you, I appreciate your engagement in making this such an incredible experience. So I think we've seen a lot of people rise, and that gives a lot of hope. And certainly just the notion that we can be on the other side of this pretty quickly. So thank you so much for including me in the discussion.
Absolutely. So Jen, let's start by just talking high level here about what companies are even subject to this bill.
That's a great question. So all employers are subject to this bill with fewer than 500 employees. The act is going to provide exemptions for employers of healthcare providers, like the first responder type people, as well as we're expecting to see the Department of Labor and Treasury issuing regulations granting employers with fewer than 50 employees an exemption from providing these paid benefits if it's going to jeopardize the viability of the business. Now, that's one of those areas where everybody's got a lot of questions as far as what does that look like, and that's what we'll address when the regulations come out later this week that you referenced.
Awesome. So we've talked just high level, who's included. Now let's move to really the two aspects of the bill. Let's start with what are the categories of paid leave, and then who qualifies, and what are the amounts of the paid leave by category? Kind of a loaded question there.
Well, it sets it up nicely. So essentially what you're asking, what does the bill talk about? So the first component of this is emergency paid leave. And that will require employers to provide paid sick time of up to 80 hours for their full-time employees who need time off in certain circumstances. So let's slow down and look at what those circumstances are. There are 5. The first one is if they are taking time off because of a quarantine order by the federal, state, or local authorities related to COVID-19. The second is if the employee must self-quarantine as advised by a healthcare provider. So not just a decision to self-isolate, but truly a healthcare provider demanding the self-quarantine. The third is if the employee is experiencing COVID-19 symptoms and is seeking medical diagnosis. The fourth is if the employee is caring for an individual who is quarantined. And finally, the fifth, I think that is affecting probably the majority of people, is due to school or childcare closures, an employee is unable to work to care for children. So it's 5 very broad categories, all very, very much related to the COVID-19 issues and what we're experiencing right now. So those are the 5 categories of people or employees who will be eligible for those benefits. Sorry.
It's probably fair to say too, Jen, that, I think we're getting a lot of questions around, well, what kind of documentation do I need for that?
Yeah. And we hear that. I mean, that's probably one of every 3 questions that comes in is, how do we do it? What is the documentation? What is the support to prevent abuse from my employees? Such a great question. And that's what Department of Labor and Treasury are working on right now. So I'm very excited to see that guidance, because I think that will help us kind of launch something for our employer clients who are just wondering what should they expect. And the employees, what am I going to have to fill out? Is it a doctor's note, like to prove that healthcare provider has told me to self-quarantine, I'm off and I'm seeking medical diagnosis. Do I have to show that I have an appointment? Like, what is it? So we should know that though this week, and from what I can see is expected in those regulations. We just don't know right now. The next piece of this is, well, what is the amount? So now that we know who it is, the amounts are the paid sick time benefits. Those are going to be capped at $511 per day for the employee's own care. So if the employee is the one who is sick, it's $511 per day is the maximum that they would be paid. And then it's $200 per day to care for another person. So you're going to choose the rate at which the employees are paid. So it's either going to be their regular rate of pay, the federal minimum wage, or the local minimum wage. It's the highest of those 3 that's going to determine what amount is going to be paid up to that either $200 or $511. That's for your full-time employees. Your part-time employees are going to be paid kind of for the average number of hours that they would normally work over a 2-week period. So I know that's going to be a difficult computation, and that's where we say, absolutely reach out to us. either your tax advisor or, our human resources consultants, what we do in our BizOps group, will be able to help you and identify what that average number of hours looks like. And again, there will be more guidance as far as trying to understand that if it's an occasional employee or how that works, and that will come out in the regs. So the next piece of this is just the paid family leave. So the Act created an additional category under that Family and Medical Leave Act called EFMLA. And that is for employees who cannot work or telecommute due to childcare concerns related to the coronavirus. Again, we're addressing this issue of what happens when your child's school is closed. And a child, by the way, is anyone under the age of 18. So it's for whatever reason, if it's essentially a daycare, an elementary student, or a high school student, and the employee cannot work because of the childcare concerns related to that, they would qualify under this EFMLA category. If the school or daycare facility is closed, the employee is going to be eligible for up to $200 per day. And that's going to have a maximum of $10,000 through the end of the year. So it's not unlimited. It's not something that's going to be overwhelming. But it is important to note that those employees are going to be eligible for EFMLA, but they have to have been employed for 30 days first.
Yeah, so I think that's really great, Jen, because you've highlighted a couple critical things, if I can take it just high level for a second. One is for the paid family leave category, the payment amount may vary depending on what category you're in, and we still don't know what kind of documentation is going to be required. And then also with the EFMLA, I think a lot of people get confused and they think that, maybe that applies to some really broad situations. Clearly, that was pretty narrowly construed. And so that raises some other questions that we've been getting. And I know we're going to talk about them later, but I wanted to point out how narrow that was, because a lot of people tend to be thinking that it's so much more broad than it is.
Absolutely. And really that's where we're staying tuned to that phase 3 that you referenced at the beginning of this discussion. The Senate proposal is going to kind of cover that. That's why you're hearing a lot, or you should be hearing a lot from your tax advisor. I don't know the answer to that question, because truly this act is just addressing these two limited circumstances: a person who's staying home because they have to care for someone, or a person who's staying home because they're sick or seeking treatment. So if you can mentally frame it in that box, I think that'll help as you're trying to discover which act is going to apply, which tax credits are going to apply, and which procedures do I need to follow. When you're working that out, the Families First Coronavirus Recovery Act is just going to cover those two, or Response Act, sorry, is just going to cover those two.
Okay, so you gave a really good outline about how employees are paid if they're subject to those conditions. Now let's flip and talk a little bit about how the company receives tax credits for these.
Yeah, that's a great question, because I think there's a lot of fear for the employers as far as how am I going to pay this out if I'm still paying people who are not working. And so what the Act is doing, and really the benefit is, the Act is actually designed to protect these small business employers, or those employers who have fewer than 500 people, because it's going to allow the employers to claim a refundable tax credit that is going to be equal to 100% of the benefits paid to these employees for their EFMLA or paid sick leave, subject to that maximum per employee. So if it's $10,000 that gets paid out, that is what the amount of the refundable tax credit is going to be. And it's important to note that it's refundable, right? So if there's no tax liability, we're still going to put it on the return and have that money come back to the employer. There isn't much guidance, unfortunately. I'd love to drill deeper into this, because I think that's what everybody would get some relief from if they understood it. Right now, that guidance will come out as far as the mechanics when the Department of Labor and Secretary of Treasury release the information. We know that should be this week. That guidance about the credit is going to relate back to the technical requirements to becoming eligible from the employee side. So just stay tuned for that. It will all tie together and make sense. We just don't have a lot of information about that right now. But rest assured, there is some credit, and cash that can come in as a result.
So, you've outlined, I think, the two big pieces of this. So that is the payments to the employees, and then also the tax credit piece. We've been getting a ton of frequently asked questions on this topic, and I think just to start right away, we need to address what is the effective date for these changes.
Absolutely, and that's extremely important. So the effective date of the legislation, the verbiage in the act says no later than April 2nd. So that means the employer can start issuing payments relative to these categories prior to that time. Now, it's important to note that that's a little bit risky, right? Because we don't have the guidance as far as what it's going to take for an employee actually to qualify. And it is also important to note that if the employer makes payments prior to April 2nd, the legislation is clear that tax credit relief does not start or apply to any payments made until April 2nd and through, at this point at least, December 31st of this year. So it's great guidance if somebody wants to pull the trigger early and start making those payments in accordance with what we know, that's allowed. It's just you won't have the documentation and you won't be eligible for tax credit relief for any payments made prior to April 2nd.
All right. Another big question we've been getting is people have been asking, should they consider laying off employees or the paid leave?
Yeah, and that is a tough question. But the paid leave is, just as a reminder, it's for employees who have to take leave to care for young children or who need to self-quarantine as a result of doctor's orders for one reason or another. So it's really tough because a lot of people are saying, I need to do layoffs, I need to cut my workforce. That may be the case, but this act isn't going to cover the relief. The tax credits are really meant to reimburse the cost of the paid leave. So if the employer manages liquidity properly, and we'll discuss that in future live streams, they may not have to experience the layoffs and the problems that are inherent in that process. So just again, keep in mind, as you're talking about layoffs, address this with your tax advisor specifically, because the paid leave is going to apply for these two circumstances.
Okay, so let's stay on the topic of layoffs for just 1 second.
Sure.
A lot of people have also said, if they've got an employee that's on paid leave, are they prohibited from laying off the employee? Which is another difficult HR question.
Well, it is, right? And if the employee is out on paid leave when they are laid off, they may be entitled to continue benefits until they're released to work. Even though the laying off employer won't be able to rehire them when they come back to work. Now, a small employer with fewer than 25 employees is not going to be obligated to reinstate an employee at the end of his or her leave if the employee's position has been eliminated due to the economic conditions or other changes in the operating conditions of the employer caused by the COVID-19. And the employer, if the employer is unable to reinstate the employee to an equivalent position, again, in that limited case of being an employer of fewer than 25 employees, the rules are even going to be different. So you'll probably get tired of hearing this, but it's one of those things that we just have to wait for the regs and then obviously consult your tax lead, your HR consultant, as far as what the right decision is. But if you're paying leave and then to some employees and then you do a layoff, the employee is going to be entitled to continue those benefits.
Great. Another question we've been getting is related to FMLA. So it talks about the fact that generally the first 10 days in this FMLA are unpaid, although they can use vacation. What I think is confusing is that there's also this 10 days of paid sick leave that can cover being out when you're out because you're caring for a child because of a school closure. So a lot of people are saying, okay, well, which one comes first then, the paid sick leave or the FMLA?
So again, if the employee meets the criteria, you're right that normally under FMLA, the employee has to use PTO or go unpaid for that first 10 days. However, the benefit to the employee as a result of this act is it's going to allow for paid sick leave to be paid during that first 80 hours. So the employee's not going to have that risk of loss of income if they qualify under the act for reimbursement.
Okay. Now, because there are thresholds around 500 employees, I think it's also important that we talk about that. Let's start with, what do employers who have 500 or more employees do?
Great question. So this act does not apply to employers with 500 or more employees. It does not change existing FMLA or Fair Labor Standards Act, to which they'll still be held accountable. So everything that those organizations have been doing and have been obligated by law to do, that will continue. When you're counting the 500 people, that's going to be actually at this point, or until we get different guidance from Treasury and Department of Labor, we're just going to determine that under the rules of the FMLA Act. So there are 4 factors that are considered in determining whether 2 or more entities are an integrated employer and would have more or fewer than 500 employees. And those factors are common management, interrelation between the operations, centralized control of the labor relations, and the degree of common ownership and financial control. So it's important to look at that when you're deciding. And again, we urge you to reach out to your tax consultant to figure out where do you fall based on that. And we'll be able to walk you through it. Now, you're going to have a lot of companies who will want to set up new entities to take advantage of the credits. But please know that we do not want employers to change the structure of their business solely to take advantage of the credit. Because remember, this is a single year thing. An entity structure change could create negative ramifications in the long term. And realize, too, the aggregation rules in the labor world are incredibly complex. So we'd highly suggest that if you are considering that type of strategy as far as breaking out entities so that you can qualify for the credit, definitely talk with your attorney or your HR consultant prior to doing so, because we wouldn't want you to manipulate something for a short-term gain that in the long run is going to have just incredibly negative potential consequences.
Right. I mean, I always tell people don't let the tax tail wag the dog, and that is definitely the case here. So we're getting close on time, Jen, and I think another big question that we've been getting that we should address as we wrap up is, will employers pay FICA taxes for the benefits? And then also, how are the employees subject to or not subject to the FICA taxes? So if you can comment on that, that would be awesome.
Oh, absolutely. So the employers will not pay FICA taxes on leave paid pursuant to this act. The employers will not report the Social Security or OASDI tax on the benefits. They will report Medicare tax, but they will receive that dollar for dollar credit for the Medicare tax. Now, the employees will pay income tax and FICA, both SSA and Medicare, on their payments as a result of the act. So definitely hope there's clarity there, because we are getting quite a few questions in that space, and we want to make sure that we let you know that is intended to be a benefit for the employer rather than, I mean, the employee is still going to have to pay income tax on any income as a result of this act.
Awesome. Well, Jen, we really appreciate you joining us and sharing your expertise, and have a wonderful rest of the day.
Oh, thank you, you too. And I will help with the questions. I'm sure there have been a million that have come in and we didn't capture everything. So I know you're going to address this, but please know that there is a lot more in this topic, and happy to help with any questions that people have going forward. So thanks, Leslie.
Thank you. So we realize that was a high-level overview. We know that there's a lot of unanswered questions here, and you may have put something in the chat pod that we haven't had time to address. So just as Jen indicated, once we get those questions, we will be sure to have a CLA family member follow up with you. We also wanted to make you aware of a couple other events that are coming up. So tomorrow we have a webinar on supply chain and how that is being impacted by all of the uncertainty that we're seeing right now. And then Thursday at the same time, we'll be having another live stream like we did today. The topic will be on liquidity and cash flow management. You can find all of this information at claconnect.com. And we just want to take a moment again to thank you so much for joining us and for the opportunity to serve you and to be a resource for you right now. And we encourage you to contact our team with any questions. We're here to help you. Thank you.